So let's talk about why owning a business smokes having a job every single time. Let's start on this business deal analysis spreadsheet that I made here. It's just a quick spreadsheet to help you as a buyer, look at the profitability of any company you're acquiring. So you can see here at the top, I put a section here for you to plug in the general numbers that the business is making over the past, 5 years. So you just plug in the revenue, the total cost of goods sold, the gross profit, the operating expenses, the EBITDA, and then what your adjusted EBITDA is calculating out to. And adjusted EBITDA is just the EBITDA and adding back any personal expenses run through the business and or the owner's salary of the business, depending on how involved the owner is in that business and how you like to view profitability of a company. So you can see if if this area up here does not have an equal sign, that means you have to plug this number into the spreadsheet, okay? And this is just, you can see this has an equal sign, so this is just an average of the last 3 years, just to get an idea of what an average looks like. Some people like to use averages when they're valuing companies. Sometimes I do, just depends on the situation. So that's already pre-built in there for you. And then over here on the left, you have the deal overview section. The enterprise value is how much you're gonna pay for the business. This adjusted EBITDA has an equal sign, so it's carried in over from the trailing 12 months adjusted EBITDA section. It's going to calculate, again, there's an equal sign here, so it's going to calculate the multiple you're paying for this business if you're paying $1 million, and that's going to be about a 3 multiple. We have seller rollover. Basically, that is how much equity the owner is going to retain. If you're going to buy a business, sometimes you like to include in the offer for the seller to retain some ownership in the business. So if you want that to happen, just plug in how much ownership retention you'd like to have here, and it'll calculate the total value of that percentage. The equity contribution is how much cash you're going to put down on the business, either through your own savings or raising capital. Lender financing is going to be, you can see here, I have a lender amortization table. This is going to pull in from here. So if you're putting down, let's say you want to put down $100,000, you want to ask for $100,000 in seller financing, so that leaves $800,000 left to finance. This is going to show you how much you're going to owe on that debt. So you can change the interest rate here, you can change your loan fees, anything you want you can adjust here, and this is going to be calculated out currently at a 10-year amortization rate, so you're going to pay back that loan over 10 years at a 10.5% interest rate. And if you go down here, it will show you how much the starting balance is, how much you paid, in total, how much you paid in interest, how much you paid in principal, the ending balance, and the total interest paid to date. And this is, again, I broke this down over 120 months because most SBA loans are amortized over 10 years. And so you can see that this business, again, going back here, made a $330,000, adjusted EBITDA $330 there. And if you subtract the annual lender debt of $131,000, and then annual seller note debt of $14,559, you're going to have some CFADs here, cash flow after debt service, of about $185,000. So that's essentially how much money is going in your pocket at the end of each year while you're paying the bank back their loan and the seller back their loan. So we can take this $185,000 and let's do a quick comparison of what that looks like versus a job. So again, the business made $330,000 after debt service. You're making about $185,000 in your pocket, prior to taxes, of course. Let's compare that to a job. We'll make it the exact same number. We'll grow the business income and the job income by 5% every single year. You have the best job in the world. Your boss gives you 5% raise every single year without question. You also took the equivalent of what it would cost you in cash to buy a business, $110,000, and put it into the stock market. Remember over here, you're going to put $100,000 down, and then there's probably some attorney fees and things like that. So we'll just call it 110. And you're going to get 10% return on your money every single year for 10 years. I know it's not super realistic that you're going to get a 10% return every single year for 10 years, and you're going to get a 5% raise every single year for 10 years. But that's where we're standing just going to use that as a comparison. Don't forget that the top 10% of earners in the United States make over 174. So to be in this category, you have to be in the top, sub 10% in the entire United States already. So it's a really great situation, really hard situation to get in. Now take acquiring a business, right? anybody can save up $100,000 or borrow money from friends and family and save up money to get to $100,000. It might take some time, and maybe that's just a little bit too large for you to start with. Maybe you need to buy a little bit smaller company where you can save up $35,000 over some time to buy your first company. But whatever your situation is, let's just use this as an example here. So over the first 10 years, we're going to call it even. Both grow by 10%. And at the end of year 9, you have 273 grand in either scenario. However, your business also grew at 5% a year. And at the end of 10 years, you can now sell this business at a 3.5 multiple, because the more profit a business makes, the higher the multiple you can sell it for at the end of the day. So this business is now making $512,000 a year, and you can sell it at a 3.5 multiple. And you can see it's taking 512 times 3.5 to get about $1.8 million. So on top of your salary in year 10, you also have a liquidation event, and you're selling your business for $1.8 million. So at the end of year 10, you have $2.1 million. At the end of year 10 here, you take your salary plus your $259,000 investment, and you have a total of, $546,000. So you can see that over that 10 years, there's a cash benefit of over $1.5 million over on the owning a business side. And then if you took that $2 million and put it into just an easy math, 10% annuity fund, like a retirement fund, you would get about $208,000 a year. While the job, you're taking your 545 grand, you're going to make about $55,000 a year. So a lot less money to live off of in the end too. And on top of that, there's also some other monetary benefits. So you have expense deductions. When you own a business, you get to deduct your home office and your utilities and all these other things that you couldn't do working a job. There's also depreciation and amortization, retirement contributions, distributions, and all these things allow you to be taxed at a lower rate than you would correspondingly working, having that same income in a job. There's also non-monetary benefits, of course. You get to go vacation wherever you want. Like I've said before, I spent 9 months in Southeast Asia last year with my wife and 2 kids, and I got to work wherever I wanted to work. We traveled all different countries and cities and islands and had a great time. And I could have never done that working a normal job or owning a restaurant locally or something like that. So you get to choose where you want to work. You get to choose your hours. I worked later in the evening through 2, 3 o'clock in the morning, just because I had client meetings and things like that in the United States. So I kept a somewhat of a Eastern time zone schedule. But you have no boss. You get to wear your PJs to work if you want to. I admit sometimes I just sit in my PJs and work in the mornings. And there's no driving to work. I mean, there's all sorts of monetary benefits, non-monetary benefits that you get by owning a business. So I put a little chart down here in the bottom. You can see, even everything else being equal, at the end of the day, you have such a much larger monetary benefit. And if you want to keep this business after your debt's paid off, right? I mean, look at how much the business is making in year 10, over $500,000 that year. So, year 11, after your debt, you don't have any debt service left anymore, you're going to be making $550,000 that year. Whereas if you had a job, you would be maybe hitting 300 grand that year. So it really starts adding up over time, especially after your debt service is paid down. And don't forget that, this is a 5% annual growth. Some businesses grow 10% a year, 15, 20% a year. I've seen businesses grow 100% a year, year over year for 3 or 4 years. So I try to make these examples pretty even here, but I think it's very, very difficult to get a job in the United States for most people making $185,000 a year and making 10% a year on your investments for a decade straight. But this business scenario is not a difficult business to find. You can easily find businesses making 330 grand a year with $185,000 going in your pocket after debt service. And you can easily grow your businesses 5% a year. Like I said, I've seen people do many, many multiples of that. I've seen a company go from 0 to $125 million in value inside of 3.5 years. So, if you want to be an entrepreneur and own a business, there is absolutely the opportunity out there waiting for you. And one more thing before we go, don't forget that you don't have to have $100,000 in cash to do this deal. There are ways to structure SBA loans with 5% down. So with $50,000 in cash, you could buy $1 million company. And then that $50,000 in cash doesn't all have to come from your savings. What if you could get your parents or your friends or family or some other investors to lend you half of that or three-quarters of that? And maybe with $10,000 down or $25,000 down, you could go buy yourself $1 million company making $330,000 in profits and giving you 185 grand in your pocket at the end of the day. So, you know, acquisitions and entrepreneurship is an amazing opportunity, and we are really blessed to have the SBA loan program in the United States to take advantage of these acquisition opportunities. I hope you found this helpful. I'll provide this again, this Google Sheet down in the description, and I look forward to doing this again. I'll see you guys next week. Bye-bye.